Good evening, everyone. Welcome to the channel. Today I am going to talk about Xiaocaiyuan interim report. Do note that this is not a financial advice or a buy or sell call. All content are AI generated and is not associated with anyone. Xiaocaiyuan International Holding Limited offers a diverse range of businesses and services, including restaurant business catering, service supply chain management solutions, delivery business operations under 3 brand names: Xiaocaiyuan Fuxinglu and Keishu. The significant increase in Xiaocaiyuan International Holding Limited's stock price by over 29.38% in the past year can be attributed to several key factors. The company's initial public offering, IPO success, where the stock closed up by 13.65% on its first day of trading, set a positive tone for the future. Strong half-year financial results, including a 35.7% increase in net profit and 44.6% rise in adjusted net profit, further boosted investor confidence. Xiaocaiyuan's aggressive store expansion plans, aiming to reach over 1,100 stores by the end of 2026, signal strong future revenue potential and have been well received by analysts. Multiple brokerage firms, including Huexi Securities and Guosen Securities, have issued favorable ratings for the company. Additionally, the revised dividend policy announced in August 2025 has made the stock more attractive to income-seeking investors. These factors combined have contributed to the substantial increase in Xiaocaiyuan's stock price over the past year. The primary drivers of revenue growth or decline in the company's financial performance can be attributed to several key factors. On the growth side, a significant increase in delivery business by 13.7% and restaurant operations by 3.6% contributed substantially to revenue growth. Improved inventory management capabilities and optimized prepayments and supply chain management efficiency also played a crucial role in driving revenue up. However, on the decline side, other revenue decreased by 33.5%. Interest income on bank deposits declined significantly from RMB 10,860,000 to RMB 4,313,000, and government grants decreased from RMB 9,596,000 to RMB 6,542,000. These factors collectively contributed to a decline in revenue. Net income and profit margins. A tale of 2 years, the company's net income experienced a significant increase of 35.7% from RMB 281.9 million to RMB 382.4 million initially. However, this trend reversed in the subsequent year, with a loss of RMB 72,131 compared to a loss of RMB 27,413 in the previous year. The profit margins also underwent changes during these 2 periods. Initially, the effective tax rate increased from 26% to 29.5%, resulting in a 61.6% increase in income tax. However, this was followed by a decline in profit margins due to an increase in other expenses and a decrease in other net income. The reasons behind these changes are multifaceted. The initial increase in net income can be attributed to various factors such as improved operational efficiency or strategic decisions made by the company's management. Conversely, the subsequent decline in net income may be a result of increased competition, market fluctuations, or unforeseen expenses that negatively impacted the company's bottom line. The fluctuation in profit margins highlights the importance of effective tax planning and expense management for businesses. Companies must continually adapt to changing market conditions and regulatory requirements to maintain profitability. The company is indeed generating positive operating cash flow, as evident from its net cash generated from operating activities. For the 6 months ending June 30, 2025, this figure stands at RMB 764.8 million, a significant increase from RMB 455 million in the same period of 2024. This upward trend indicates a substantial improvement in the company's ability to generate cash from its core operations. The company's debt level and interest expenses have undergone significant changes. The current liabilities, which include bank loans and other borrowings, increased from RMB 0 to RMB 100,000 between the 2 years. This substantial increase in debt level is likely to result in higher interest expenses. In fact, the interest expenses paid on bank loans rose significantly from 354 RMB 0 in 2024 to 615 RMB 0 in 2025. This indicates a notable increase in the company's financial obligations and expenses. Management is optimistic about the company's outlook, citing the immense size and growth potential of the mass Chinese cuisine market. To capitalize on this opportunity, they plan to drive business performance improvement through operational efficiency and cost management. A key strategy is to expand into subsegments with lower average spending per consumer, while consolidating their leading position in China by offering exceptional dining experiences and enhancing operational restaurants. There were no notable acquisitions or divestitures in this financial period. The company's focus remained on its existing operations and investments, with no significant changes to its portfolio through mergers or sales of assets. The company has a history of paying dividends. In 2025, it declared and paid out a total of RMB 625 million to its shareholders through 2 interim dividend payments. This demonstrates the company's commitment to returning value to its investors. That concludes the financial summary for Xiaocaiyuan. Feel free to comment below, and I will be happy to answer them when possible.